I bring you greetings from just outside of Daegu, South Korea. Taking a quick work break just to go over the recent SEC statement on the disclosure requirements for crypto assets. First things I'll say is, we are living in interesting times, as they say. Once again, we've got the SEC coming out with further guidance in the form of a statement around what are the parameters or rules of the road as it relates to crypto assets and networks that are considered securities. So the interesting thing here is they're not saying that all crypto assets are securities, but what they are doing is laying the foundation for crypto assets that are actually securities and laying out what the disclosure obligations should be. So the TLDR of that is that the traditional prospectus or disclosure requirements you would have in a securities offering, this statement is basically a modified version of those existing requirements with tailored guidance that's unique to the crypto marketplace. So they go over things like disclosures of the consensus mechanism, how things work, how an issuer of crypto assets that are securities need to describe the project. They go over the risk factors that need to be stated. They also go over the fact that management must lay out things regarding token supply, audits of contracts. So what they're really doing is, and you'll notice the specific items I'm highlighting, the statement itself is pretty long and goes over a number of things. But I would say that what they've done is they've pretty much said, here are the rules of the road for white papers. And why I say that is that if you could be a security or you're on the line of being a security, your white paper, if you were found to have actually been issuing securities, is going to have these things in there. If you're exempt from securities offerings, which would be things like venture capital, private equity, exempt transactions that already exist under the SEC, you wouldn't necessarily be subject to these rules directly. However, as a best practice, I would suspect that over time, just like in private markets, you have prospectuses or PPMs. You're going to have a similar sort of market practice that becomes developed for white papers for projects that are issuers. Whether or not they actually are even securities, I think you're going to likely see that develop as a best practice. And I actually think it's a good thing. They're clarifying, token economics, token supply, team, risk factors, all those sorts of things that need to be listed for investors when you are a security. But what I think other lawyers are going to do in the space is take a look at these and create best practices, even if you're not falling in the security bucket. So I think that's going to be a good thing for the industry. I also think it's going to be good for consumers, end users. And also, like I said, to wrap this video up, I think they're laying the foundation for traditional securities markets players to be able to start offering products in this space. And that's really who this statement is kind of issued at. If you're a DeFi project or some other sort of crypto project that's been in the space, you would likely fall in some sort of an exemption, just the way things have worked historically. But as we see with places like Circle doing IPOs, and we see large investments from folks like Binance, potentially folks coming on shore like Tether, that's really what this is going to be looking towards for the future. So with that, we'll sign off and talk to you soon. Bye.